The CPA here. Hope you're doing well. The Employee Retention Tax Credit is going to be for you if you have employees and you were open in 2020 during the pandemic, meaning your business was functioning on February 15th or after. And the reason that I'm saying that you qualify for it is that in the tax law, in the stimulus, in the CARES Act, it defines that for businesses that are 100 employees or less, and now it's 500 or less, but nonetheless, the law indicates that for the Employee Retention Tax Credit, whether your employees were working or not, if your business was functioning during a partial or full shutdown by the government, the wages that you pay qualify, all of them, to all employees. So I'm going to put a link to the IRS website. Know this, the IRS still needs to update it. They say it right at the top, depending on when you click on this. When you click on it and you go to the link, if you see a yellow big warning by the IRS at the top that says things on this page need to be updated, then know that they need to get updated. But here's the deal, okay? The rules aren't changing for 2020. The rules are set. We know what the rules are, and the rules are this. If you're 100 or less employees, you qualify for the credit if you were experiencing a governmental shutdown. Now, everybody just somehow wants to go like, oh, it doesn't count for me. It must not count. There's no way that works. It's an essential business. Then okay, I mean, I can't convince you, but when you read it, when you actually read it, and I'm putting a link to it, when you read it, okay, you can't add sentences. You can't go, well, that can't be true, and oh, but it says this, but it must not qualify if you're an essential, or it must not qualify for that. Okay? Now, one of the things I want to mention to you is that I've got a friend of mine that I want you to subscribe to his YouTube channel, Josh Jelinski, Financial Quarterback. He and I are going to be doing some things together. I'm going to be live on his show tomorrow. If you missed the live, then you can watch the show back on his channel where we're going to be talking about these issues, taking questions from his viewers. He's got a show up and down the East Coast. It's on iHeartRadio. It's on radio stations, like real legit radio stations. It's pretty sweet. Josh Jelinski and I have become friends. He's been wonderful and has had me on his show up and down the East Coast over the last year. We're going to be teaming up now, though, on fairly sophisticated subjects, and I'm going to have him live on my YouTube channel. I'll be live on his YouTube channel. But we're going to be talking about these things, and part of what we talk about when we're on his is actually following the rules. Well, when you read the rules on this Employee Retention Tax Credit, it is this, okay? It says very plainly, if you have a business that has been in a governmental shutdown, partially or full, the wages that count are all wages paid to employees during that time, whether the employees were working or not. Whether the employees were working or not, that business qualifies for the Employee Retention Tax Credit. Now, up until the stimulus that became law on the 27th of December, if you got PPP, you didn't qualify for it. Okay? Well, the new stimulus indicates that you can qualify for it. It doesn't matter if you got PPP or not. So there's this retroactive tax credit. The IRS, what it's going to update on its website is not the rules in terms of how you qualify. What it's going to update on its website is that you still can get Employee Retention Tax Credit even if you got PPP. What they're going to update on their website, I believe, is probably just a minor caveat change, most likely to Form 7200, that just goes, okay, if you're getting a retroactive, here's how you go about it. Now, right now, you can do it all on Form 7200 if you hadn't already filed 941, but there's many millions of businesses out there that have filed 941s for fourth quarter. So technically, the only way they're going to get the credit, which is easy to do, but is filing a 941X, which is an amended 941 form. So the IRS, though, I think realizing this And because it was all last minute, I think what they're going to update is just simply, well, here's a way that if you already filed 941, here's how you can now apply for this credit. But the rules aren't going to change for 2020 other than the one that says, oh, you can apply even if you got PPP. You can get the credit even if you got PPP. Now, the one thing that's key here is that the wages that you're using for the employee retention tax credit, well, those same wages can't be used for other tax credits, and those wages can't be used for PPP forgiveness purposes. But given that we have 24 weeks to achieve forgiveness, meaning you get PPP, you have 24 weeks to use up that money. That's a long period of time, right? So we do have to elect wages out of the covered period because the law says that they are specifically during the covered period, any and all wages, not just the wages from your PPP money, all wages during the covered period are deemed for PPP forgiveness purposes. So even if your PPP was $5,000 and you had $1 million of wages in your 24 weeks, the law indicates that all those wages, all $1 million of those wages are deemed for PPP forgiveness purposes. Well, it's pretty simple. You just have to elect and identify and elect those wages out of PPP forgiveness deemed purposes so that it can be used for the employee retention tax credit. In my opinion, we got to make sure that that's done when you go to file for forgiveness. To get the employee retention tax credit, by doing that and applying for it, you have elected those wages out and you are using those wages for the credit purposes because you haven't filed for forgiveness yet. So when you go to file for forgiveness and you say, here's my wages for PPP forgiveness purposes, which is all the wages during the covered period unless you've used it for a tax credit, then you have to identify and elect out those wages that you're using for the employee retention tax credit. We don't yet know that here on January 23rd how to do it, but it's simple. Okay. However it's going to be is going to be simple. It's just identifying those wages. Now, I'm not seeing anything on the new updated PPP forgiveness applications related to this. I think it might be something more on the IRS side, but it'll come out nonetheless. Now, when we're talking about applying for the employee retention tax credit and applying for forgiveness, you want to apply for the employee retention tax credit first, get that money, then apply for PPP forgiveness. Those of you that are antsy and you just feel like you got to get it all over with, you got to understand there's a process here. There's a way to go about it. Now, if you've already filed for PPP forgiveness, well, you don't have a way to elect the wages during your covered period out for ERTC purposes. So I'll be talking about this on Josh Jelinski's show. We'll be talking about it on his channel, so I do want you to check it out. In the body of this video, I've got a link to his channel. I'd like for you to click subscribe. He's launching his channel. I'd like for you to help me help him do that. His show, I've been on it a bunch up and down the East Coast. He's got a great book. I want you to check him out. He comes from a financial background, of course. But the thing to note here is that with the IRS update to the website, which we don't need to wait on, okay, in my opinion, if you've already filed 941. In my opinion, you can file the Form 7200. In my opinion, you can take the employee retention tax credit even if you haven't yet filed for forgiveness. I see it's a 1-2 step. You apply and you get the employee retention tax credit, which in itself, you are saying, I'm not using these wages for PPP purposes. But when you go to file for forgiveness, you have to identify those wages. How do we do that? How do you do the election? I'm repeating myself. We don't know yet. So right now, I'm going to give you a link to the IRS website. If you go to it and you don't see that yellow warning at the top, then they've updated it. And here's another little secret. When you go to the bottom of the IRS's web pages, you'll see at the bottom when they last updated the web page. So right now, when you go, if you see anything that shows that it was updated in 2021, then you know that we are cooking with peanut oil, as they say. And then also there's a Form 7200 that is in the link that I'm providing you, Form 7200, I think will be ultimately how you will get the employee retention tax credit if you've already applied for 941. Hear me straight on that. We don't know that yet. That's my hunch. 28 years of experience. I think the IRS will say, okay, even if you filed 941, you know what, go ahead and file 7200. That's my hunch of what the IRS will most likely do, because it's the easiest way to get the credit. And or the IRS will say, well, if you already filed 941, you got to file 941X. That's all I think we're really waiting for, is for those that already filed a 941. How do you go about it? They then are going to update, they being the IRS, the website to talk about how you get the credit in 2021. Well, how you actually take advantage of it and get the money for it and reduce down your payroll deposit and or on your credit on the 941 and or taking the money on the 7200. It'll be the same parameters as 2021 will show you in terms of the rules. How you get it is the same. The update to the IRS website will be that it's a 70% credit, where in 2020 it's a 50% credit. And it's up to $10,000 of wages for the entire year for the employee retention tax credit in 2020. Well, it's up to $10,000 in wages per quarter in 2021, extended only to June 30, so first and second quarter. So the ability is for the employee retention tax credit that you can get a $5,000 tax credit per employee in 2020. And you can get up to a $7,000 tax credit per employee per quarter in 2021 for the first 2 quarters. Now, when I give you this link to the website, you'll be able to read up on it in terms of, well, what's a government shutdown for you? What's a government shutdown in your area? They give you enough explanation. I will tell you, though, that if you're a small business in the United States of America, you were affected by this. And when the law and when the IRS indicates that for those that have 100 or less employees, as it reads right now, okay, you qualify for the wages, all wages, all wages, all employees, whether they were working or not. So when you hear, well, but I'm an essential business, so I had to be open. Yeah, your employees were working, you get the credit. Oh, but no. But I'm an essential business, so I couldn't close. Okay. But the credit is for those that, if you're in an area that had a government shutdown, partial or full, okay, but your employees had to keep working, you qualify for the credit. So it is a little mind-blowing to me how many roadblocks everybody wants to put up on this one and go, no, that must not qualify for me, or that doesn't qualify for an essential business. So, well, if they stayed open, it must not qualify. Well, then why does the law read, why does the IRS indicate this? For 100 or less employees, now 500. All wages during that time period to all employees, whether they worked or not, qualify for the credit. So how do you find a set of circumstances that somebody doesn't qualify, an employer doesn't qualify for the credit? How do they not qualify for the credit? Employees were working? Yes, okay, you qualify for the credit. They weren't working. Okay, great, they qualify for the credit. Is it all wages? It says, yes, all wages. But is it all employees? It says, yes, all employees. So I'm giving you a direct link right to it. Read it. It's in the FAQs. IRS makes it simple. The only thing the IRS is going to update is for those that didn't get on this and file a Form 7200 before they filed a 941, and or they filed a 941, but they didn't put the credit on there. Well, how do they go about it? That's what I think we're waiting on. And then waiting for the way that we elect wages out of the PPP forgiveness. In terms of that classification, we need to know that as well. Listen, it's all moving fast, okay? It's going to come out. We're not talking about waiting until Siberia, has sunny beaches. We're not talking about waiting till the last second. I'm talking about waiting another week or so, another 10 days. Take a deep breath. The antsiness needs to end on this. It needs to be over with. The anxiousness needs to end on this and go, okay, where am I now? So here's where it's at. If you already filed a Form 941 for fourth quarter and you've not taken this retroactive tax credit for the employee retention tax credit, then you're taking a deep breath until the IRS tells us, which is going to be any day, okay? how you go about claiming it. If the IRS never tells you, okay, then it's simple. You're going to file a Form 941X. That's how it's going to work. Okay. So if you don't want to wait, then file a 941X. You can't wait another day or two or 3 or 4 or 5 or a week. Okay. Now, if you haven't filed 941 because it's January 23rd, then you file the Form 7200. Okay. You take it, right? Now, if you filed a Form 7200, then file your 941. When the IRS updates it, you've done everything properly. The one thing I think that we're going to have a snafu the IRS is going to have to also address here is that for those wages that were used for any of these tax credits that came out of the Family First Coronavirus Response Act and or the CARES Act, Box 14 of each employee has to reflect the wages that were used. It makes no difference to the employee. Zero difference to the employee. No difference to the employee. The employee doesn't even have anywhere to report it on their individual tax return. Zero difference, but it has to be disclosed. And so there's going to have to be some mechanism here that there's going to be a bazillion W-2s having to be corrected. Well, I'm going to say time out on that one because I think part of what the IRS is coming up with is like, okay, so for those that already filed 941, for those that have already produced their Form W-2s, for those that have already produced their Form W-3, then here's a remedy. That's what I believe the IRS is going to be coming to the table on as it relates to 2020. And then they're going to update one rule for 2020, which is if you got PPP, you qualify. The second thing they're going to update is that, well, it's fewer than 500 employees. And then the other thing they're going to update is just the rules as it relates to going into 2021. And now those that have made it to here, and you're like, wait a second, I thought that your gross receipts had to be down to get employee retention tax credit. Okay, that's a second way to qualify for this. That's a second way to qualify for this. You don't have to be shut down and have your gross receipts down. And it's pretty simple. In the quarter that your gross receipts are less by 50% or more in 2020 compared to the same quarter in 19, you qualify for this credit during that quarter. All wages during the quarter. It says it right where I've sent you the link. All wages, all employees, whether they're working or not, qualify for that credit up to $10,000 per employee for the year. When you look at 2021, was there at least a 20% decrease in gross receipts from a quarter in 2021, first quarter 2021 compared to first quarter 2020, or second quarter 2021 compared to second quarter 2020. So there's a 20% decrease. Well, then you qualify for the employee retention tax credit regardless if you were shut down. And it's all wages to all employees, okay, during the quarter, okay, if we're talking 500 or less employees. So here's the deal. You got questions on it. The link I gave you is all the answers for you, okay? If you still see the yellow warning at the top, okay, all that means is they haven't updated to just talk about 2021. But the rules about the reduction in gross receipts, the rules on how you go about qualifying, the rules on governmental shutdown, the rules on what's qualified wages, and all the rules, they're all the same rules, okay? All that's changing, and I'm now repeating myself, all that's changing is you can get ERTC in 2020 even if you got PPP, okay? Everything else is the same. Everything you want to find is right there. And if you are in a situation where you still have doubts, then you need to talk to your advisor. You need to read this website over and over and over and over and over. You need to look at the instructions over and over and over and over, because I'm telling you, you'll qualify for this if your employees are under 500. If your employees are 100 or less, you even see it right there, right now in black and white, that you qualify. They're going to increase it to the 500. So anyways, I know people are overwhelmed by this, and what I'm trying to tell you is you shouldn't be. It's easy. It's simple. It is so simple. All right. So I'll have some other videos once the IRS comes out with the update and showing you some of the calculations. Check out my other videos related to that. I want you to support a friend of mine, Josh Jelinski. Go to the body of this, click on the link and subscribe to his channel. I'll be also doing some videos that are on his channel as well, including on his show. So I'd appreciate if you would support Josh Jelinski, the financial quarterback. All right. Hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me.